Hi guys, thanks for tuning in to another episode of Nuggets News. So much to get through today. I can honestly say this was probably the most enjoyable episode to put together. There is just so much macro news, so much crypto news to get through. We're going to cover it all, break it down for you in easy to understand terms. And I do want to start off with a couple of important bits of housekeeping. So I know that there's been these YouTube scam ads. I just want to let you know there's nothing we can do about this. YouTube choose those ads, and I can't believe they're unable to filter them out. I would encourage you to download the Brave browser. It's free to use and it blocks all ads. If this becomes a bigger issue, I might turn off ads. But again, just so you know, if we don't choose to allow ads on our videos, YouTube doesn't suggest our videos, and sometimes it won't even show it to you if you're a subscriber and got notification bell turned on. So that can drop our views by as much as 50%. It's not so much the money I'm really fussed about. I obviously want to protect beginners. So look, let's see how this plays out, but it is really frustrating that this has happened. And it's probably a broader topic we're going to talk about tonight with these issues with centralized platforms and I guess the attacks on crypto. And I actually think there's something going on here if you scratch beneath the surface, which we will get into. But look, I've got plenty of information on how to identify scams for your friends and family, not just the YouTube scams. There's so many popping up again as we get into this altcoin cycle. So look, please send this to your friends and family that are trying to sign you up to these pyramid schemes and they don't understand how this all works. I've clearly explained it all in these videos. So please head over and watch that, because there's still people that have been in the space for years that share these things and they just don't realize it. You know, it's always too good to be true, guys. There's never these guaranteed high monthly returns, and trying to sign up friends, that's just how the Ponzi's and pyramids work. Now, the big news this week was that Twitter hack, and they actually got root access to the whole platform. So it wasn't these individuals that got hacked. And again, the fact that this was rolled out in the mainstream media as a Bitcoin scam, I'll get into it a little bit later on, but I think that one of my predictions is coming true, unfortunately, and that was that we'd start to see false flag attacks and this real change of narrative against cryptocurrency. So it's really important that we get the truth out there, because I think, look, the battle for money and freedoms, privacy, civil liberties, it is really just heating up, and it's all interconnected and it all comes back to the world of money. So that's a bit of a rant to begin with. I do want to welcome a few hundred new subscribers to the channel again this week. 124 members, so we're up over 2,200 now. It's just, I can't believe how much our family has grown, and the quality of posts in here from you guys as well. I mean, the number of huge winners we've had, people helping the beginners, the trading. Honestly, try it out if you've never tried it out, guys. 50 Aussie dollars a month. That's around 35 US or around 30 euros. So very affordable. I know a number of you have paid off your yearly membership again today with a little trade that we're going to talk about. So welcome to all our members, and you guys get bigger discounts on everything, as well as all our premium research. There's been some questions about the Nuggets News app, the new platform. We've had a few delays because of coronavirus. For those of you, again, that don't know, we've been hiring more staff. I got an office in Brunswick, and then everyone had to work from home. That has set us back. Look, a few people were giving me a hard time in the comments saying, this isn't even happening, you're just trying to string people along. We've already started onboarding some members and doing some beta testing, and guys, it is a very slick product. I'm so happy with it. We want to take our time and get something out that's going to blow you guys away, rather than release something that's, crap and get it out early. So that's all the housekeeping. Let's get into the Australian news, and as always, the topics will be time stamped once the team gets to that, normally an hour or two after uploading. Okay, so just this afternoon, it's now compulsory for a few suburbs, Melbourne, Mitchellshire in Victoria, to wear those masks. So they want to get on top of this early. It's very frustrating to watch this sort of second wave come through when most of Australia had it down near 0 cases, but this is really hurting the economy. This is the fine line that we walk, and that this is going to continue to be hotly debated. Obviously, I was a fan of going hard early and trying to eradicate it like New Zealand, but there's no point about talking about that now, and I'm going to try and keep my opinions out of these videos and just report the news. But unemployment now at a 22-year high, despite a bit of a rebound in jobs. A lot of those were, part-time and low-income people seeking more employment. Australia's effective unemployment rate, even Josh Frydenberg saying, yeah, it's closer to 13%. I think it's probably even higher again. When you look at these, a million, this figure of how many people are now without work that are in that age group that want to work and that want more hours, we really do need to upgrade our economy. Something I've been saying on the channel for years and years now, and it is frustrating to watch them just try and pivot back to housing. How can we boost that? We need to be really concentrating elsewhere. But Qantas, these tourism sectors, education, of course they are taking a hit. I think there's a huge opportunity in Australia to get local tourism booming. Even down in Tasmania, where we've shut the borders, I think our economy can boom if we all start looking after locally and holidaying in different parts of the state. And they're the sort of things that I think we're going to see, a bit of national pride maybe to get our economy going again. But Qantas have made it clear there's no international flights until March 2021, unfortunately. Okay, so we got some more data about the amount of people trying to withdraw. I think last week I said that we'd expect a large jump in people trying to access their super, and sure enough, that's what we saw. And just in the past 10 days, we had over $10 billion. So I know that everyone was getting their second dip after the end of financial year, but this is a pretty decent pace of withdrawal. I think the stat is something like 5% of Aussies have now withdrawn their entire super, which means they had less than 20,000 to begin with. So this is another topic that is being debated. Those people now have no retirement. Should they need that now? We're getting some data that a lot of people that withdrew, half of the people that withdrew actually were getting the government funds and hadn't seen a fall in their income. So whether or not they're going to get in trouble, that remains to be seen. But there's a lot of issues that people have got very strong opinions on, and you'll notice that in the comments. So what the government came out with here is another program, JobTrainer. They've got plenty, no shortages of names. But look, again, this is to help the school leavers. It's the lower income jobs, the training jobs, the apprentices. They're either going to pick up half or all of those wages, depending on the type of job. So yes, we definitely want to keep those people out of school that are keen, off the streets and unemployed. So look, I hope they try more of these things in different areas. It's a huge opportunity just to keep an open mind and start fresh rather than just do what we've been doing. Now, another topic which frustrates me no end, because it's something that we predicted with these first homeowners grants 2-3 years ago. I said that these were going to come, but they just don't work, because what happens, and you talk to your builder friends, they say, it just pushes up the price for everyone because they know they can quote $25,000 more because they've got that grant behind them. In Tasmania, Western Australia, I'm not sure if any other states have added this yet as well, but there's a second bonus, so you can get $45,000 if you meet those criteria. And these people are seeing this firsthand, that they thought that they could get into the market, and sure enough, the house prices in the area they're looking for have now rebounded by that amount because they're competing with the wealthy that have got lower interest rates, and all their stocks and all their assets are at record highs. Banks are just not willing to lend to a lot more people. So you're seeing these banks openly come out and say that we're really tightening the screws on who we're actually going to lend to. So the people that they will lend to are the wealthy, and then they can scoop up more assets and keep leveraging up. And here's some figures put out by an avid commentator. You guys know that I love keeping an eye on his tweets. But some of these amounts that you can now borrow from the big four on an average wage compared to what they were giving out before the Royal Commission, these are the sort of prices that we're possibly going to see housing come down to. If water was allowed to find its level, I think these are the sort of figures we'd see in Melbourne and Sydney and the close surrounding suburbs. But whether or not they're going to let that happen, or they're just going to try and throw more stimulus, remains to be seen. But it's no surprise that with the banks facing all these issues and delinquencies, we're seeing all this talk about the bail-in laws really in the media again. So I know, Robbie and the guys over there, Martin North, a lot of the little Aussie YouTube channels are covering this and getting the message out there, which is fantastic to see. But we still don't have any clarity about the bail-in laws, whether or not your deposits are going to be part of that if the banks get into trouble. And again, that's why we're seeing a lot of people go to things that they can keep in their own custody, physical gold, silver. Some people like the cryptocurrencies as well. So house prices unlikely to rebound till 2025. It's funny how quickly some of these news sites have really changed their tune from, house prices never go down, predicting these booms that just compound every year. Another big bank, despite the Royal Commission, guess what? Another class action. Look, if they got the fines that they deserved, these banks would have been bust by now, allowed to fail. You get new people in there, new boards, new management that have better ethics, and the economy starts chugging along better. So no matter which way you look at it, it's just another form of kicking the can down the road and these people getting a slap on the wrist, and it continues. So this class action was over these car yard rip-offs. In some instances here, they were giving out these sort of flex commissions to these car dealers who were charging up to 10 percentage points above the going rate. So going to get a car, maybe you could get a 3% rate. They're charging 13%, for example. You end up paying $50,000 for a car over the life of the loan that should have cost you maybe $20,000, $25,000. So let's see what comes of that class action. Now, Singapore have come out with some fairly sharp and honest statistics. Economy shrinks 40% quarter on quarter, but lo and behold, China avoided recession. So whether or not you believe these numbers are up to you, but GDP beat the forecasts. Now, if we break this down a bit further, let's think about the reasons why. We've got the trade war at the moment. Some countries really hurting, developing nations really hurting from COVID. But in China, we've actually got a spate of bank runs, and this has been fueled by social media. So I'm sure they're going to try and get in front of this and suppress it like they always do. But there's so many bad loans over there from all that money they lent to, build roads to nowhere, and now the maintenance costs and upkeep start to come into the equation. So you've got to spend money on things that create economic prosperity, not just build things for the sake of it, which is the path we're going down in Australia. But this is the big push in China to try and get a more, power for the yuan, because if they can have all that power that comes with the US dollar and world reserve currency, that really works in their favor, and you can start to strengthen your currency, buy more goods. They're the type of, privileges the US have that China really wants. And there's no doubt we're seeing these tensions play out. If you haven't read up about TikTok, the app that all the kids have got these days, it's just scary stuff. So it's basically a data collection app that's, marketed as a little fun app for kids, whatever, but it is really scary. Read these details, have a Google if you haven't already. This is scanning your clipboard, your copy paste, your passwords, sending GPS data, the whole gamut there, guys. So read up on TikTok if you haven't already. Now, the US possibly rejecting these claims, and the South China Sea, where China built those islands for their military base and outposts. Big reversal of the Obama era policy and the appeasement that happened there. So at the moment, there's no missiles being fired or anything like that, but we continue to see these military exercises. This is right on our doorstep. Australia is continuing to get dragged into this in some way or another, and I just really hope that nobody makes a rash decision, because there's a lot of emotions at the moment, and military war as well as economic war is the last thing we need. So in our mobility trends, we had a bit of a leveling off in America, and we're waiting to see if this was a downtrend or just a one-off in terms of people being out and about, and it started to tick up again. So there's no slowing down of that mobility in the US, and continuing to trend up across Europe there. But in America, yes, you can say they're doing more testing, but what we were waiting to see was the flow-through effects, and what you really want to focus on is the death rate. Now, again, some people say that the hospitals are so busy, they're marking people down that had other comorbidities, but you can argue for and against that. We're seeing big increases in the number of people that die at home that are going uncounted towards those stats scores. So when we're in these monster numbers and hundreds of thousands of people, it really does my head in that some people are out there still saying that this isn't even real. Again, another friend, most of you will probably know Omar, crypto. So his mother, I think it was their uncle, or died of COVID this week. So sooner or later you're going to hear of a case that's a family member or friend of a friend, and that's when it's going to hit home. So just because we're in lockup and you can't see it outside your window, or there's one hospital that wasn't busy, I really want people to start to take this seriously, because unless we get on top of this, and it does not look like we're going to have a means to combat this anytime soon, because what we're finding out now, like I floated a few weeks back, these antibodies really taper off. And this is more like a common cold, where you might get a new strain every season, or your body doesn't develop this ongoing immunity. Now, there are some studies possibly showing that our T cells might create long-going immunity, but we've got a number of studies now showing that it doesn't. So they taper off 3 or 4 weeks later. And that's not good news for those targeted vaccines that rely on getting your body to build that immunity response if it's only going to taper off, whether you've had COVID or a vaccine against this. So just a few things to be aware of. Moderna stock absolutely pumped when it had this positive news. Sure enough, it's a bit of a reality check a few days later. But not only that, it caused an adverse reaction in 50% of people. So it depends what type of reaction that is. If it's a bit of skin irritation, but if we're starting to see more nasty reactions, then this is why we said that this is going to take a year or 2 years. Here we are 6 months later, and a lot of people saying, everyone's working on this, we'll get there. But it's just not that easy. These things are extremely complicated, and we've never found a vaccine for a coronavirus in the past. So just something to be aware of. Now, the next phase of all this, like Raul and like we've spoken about on the channel, a lot of commentators are talking about the liquidity and insolvency, the different phases here where you can't bail everyone out. And we look at these numbers, 32 million people now, continued claims. 10 days away now from the American decision about whether or not they're going to lose that $600 a week lifeline. Similar situation in Australia, where I spoke to people last night that are business owners, and they're saying their staff aren't coming to work because they're getting paid more than what they would if they worked. So the government are trying to avoid that, but at the same time, there's a lot of people that maybe they don't have a job, or maybe they fall through the cracks and don't meet the criteria. So I don't think it's necessarily a cliff that we're heading for, but it's going to be messy. The next few weeks and months are going to be really messy, and that is what you need to be prepared for. Hopefully you're in a position where you can look after yourself, friends and family. But the hopes of the V-shaped recovery and everything going back to normal, I think more people are realizing now that that's just not the case. 84% of these small businesses that got the paycheck protection loans, they're saying that their funds will be exhausted by the first week of August, but only 16% are saying that they're confident that they'll able to maintain their payroll without that further government relief. And governments are really reluctant just to keep handing out money. They don't want to. Well, their budgets are already $3 trillion down in the US, for example. So, auto loans on cars, we did see a huge uptick in delinquencies the past few years as we're giving out bigger and bigger car loans. That's continued to decline, but I think this is a matter of kicking the can down the road, like we've seen in Australia with the mortgage market, a lot of extend and pretend rather than a real number. We've seen the number of reopenings and missed housing payments continuing to remain high here in July. Now, what that is going to lead to is the huge uptick here in delinquencies, far bigger than what we saw back in the GFC. Just look at this chart. It peaked at around 2% in the Great Financial Crisis. It's already at 3.4%, and these are figures from April. So a lot of mortgages are already delinquent. We're seeing this huge looming eviction, 28 million homeless possibly in America. And this is why I think the government are going to be forced to do it unless they want huge civil unrest. Can you imagine that many people on the streets or hungry, can't feed their kids? And that's when the rules really break down. So the number of listings in San Francisco, out of season here, huge spike. People are forced to sell. This is what we're starting to see. Maybe we'll see this in Australia if we go down the same path. Asking the millennials, are you thinking of upgrading and buying a house? And all these numbers are basically saying, we're going to kick the can down the road. We're going to maybe downgrade our apartment, but certainly, buying those houses, it's just a risk, even if you could maybe still afford it, that you're not going to take. What if your partner loses their job? Those type of things come into the equation. The hard thing, and what the Fed and other central banks government's trying to avoid is getting that labour market back. So it's very quick to fire people, hard to get them back. We can see here the non-farm payrolls when we have the decline, 4 years here, 6 years here before it gets back to break even. This is another chart just showing that visually from different recessions or declines in labour force statistics. This has been one of the sharpest so far in terms, but again, they kind of changed the numbers. Like we spoke about before, you need to keep an eye on the entire picture of who's working and who's not. Now, we have seen a big rebound in retail sales. So I think that was because of people getting more money than otherwise would have. A lot of this was retail and people just buying clothes, maybe because they're going to be at home and they need an extra pair of track pants, Ugg boots. I don't think that this is people going out, being positive about the economy. They've got a pay rise and they're going out and spending that type of retail spending that we would see. In terms of the real retail and food services, we do see that they tend to peak before the recession, before they sort of turn down, and that can last years on end. So a sharp rebound, but right back to these levels, and that doesn't mean that it's not the start of something far worse once the government look to pull back all these benefits. So a professor whose formula predicted bankruptcies, he's got a big warning for us. I mean, you don't really have to be a professor. We've crunched these numbers for you guys. We see the big banks are making provisions for bad debts. We're talking sort of tens of billions of dollars, but it can be worse than that, what they're facing. I think the thing that I want to really just drill and continue to go over is that 12 years later and $12 trillion later, the money that central banks have created, we're back to this same position where nothing has really changed. Banks are seeing their worst quarter since the financial crisis. They're starting to provision for all these big losses. They're probably going to need a bailout. They've already had all this money printed and injected into them that people didn't really get a say in at this time. So if this was something that had to be passed and debated, I think we'd have more people protesting. And again, at the moment, they're going to definitely say that no protesting with the virus, even in the places where it has been mainly stamped out. It's going to be used as a bit of a excuse. But if you look past all that, banks are now speculating, and we've got to this point where banks have gained $10 billion from the Fed's open market debt operation, so buying corporate debt bonds, $18 billion from the PPP fees, the CARES Act. So this is just the fees that they're charging. So they've made enormous amounts of money, and small businesses are reluctant to go into more debt, and they're just paying their staff. They have to pay it back. Once again, the banks have got away probably with more profit. And sure enough, JP Morgan record trading helps ease that pain. So they can take all the deposits and speculate. If they lose money, they know they're going to get bailed out. But here they are, markets have absolutely pumped. They were front running the Fed's buying of all the junk debt and the junk ETFs, and they've made a fortune with that free money. All these execs have paid themselves bonuses. A lot of the bankrupt companies paid out $131 million in bonuses before they announced they're bankrupt. So this is the sort of corporate world where there's no ethics. I mean, don't hate the player, hate the game. This is what regulators have allowed because of all the under the table payments, and money runs the world, unfortunately, these days. And hopefully we can build that fairer system, which is why we talk about all the crypto stuff and decentralization of power. But the insiders are continuing to sell. This was a massive jump, even just in the last few weeks. I think it's doubled from the same week a year ago, the number of insiders that are selling. And again, regulators are moving to propose this change where you don't have to report what you're doing. So people like Stan Druckenmiller, George Soros, Paulson, these guys don't have to report and be transparent about what shares they're dumping anymore. And I just don't know why they're making it so much easier for these guys to be dodgy. The number of companies that are reporting their guidance has really plummeted. So down to a little bit over 100 out of the 500 companies in the S&P 500. So once again, when things are going bad, well, you say that you're not going to give any guidance about your earnings. Those that are, and the estimates, down 60%, 44% consensus estimate for Q2 this year. continuing to be down, but getting better in the next few quarters. And that's where things get interesting. If they don't rebound, how they're going to change their outlook. But I just want to have a look at this chart for a second. And this is the PE ratios for the different size companies. And what we can see here is the really large companies have got the biggest PE ratios. So people are paying the most for these huge companies that have got cash on their balance sheets a lot of the time, little debt, and the smaller companies, people really aren't overpaying for them. And this is why those monsters are just getting bigger, because they can just buy up little companies in mergers and acquisitions, wait for them to go bust. So another stock market indicator just hit 20-year lows. I think this is the put to call ratio, again with our options and traders positioning themselves for more upside. Look at the NASDAQ PE ratios here. So even from where it was overheated a year or two ago, 55x. So the PE ratio on those NASDAQ stocks, 55 times earnings. And when you look at the Fed's assets, and the Fed say, oh, it's no relation to us, we're not interfering with the market, we're not causing inequality, this is such a high correlation. I'm sure that would be in the high 90s if you modeled that. So let's have a look at where the funds are flowing and from whom. This is where it gets super interesting. Record funds into the tech sector in the last 2 weeks, $5 billion. When we have a look at the NASDAQ optimism, it's once again off the charts, higher than the GFC, and only the .com bubble here being a little bit higher. So everyone's really optimistic. When you have a look at the percentage of people that are shorting, this is at another lowest in a year on Friday, just before the last time we saw the big reversal. So short funds have closed down. They've been blown out of the water. When you have a look at the US tech stocks versus just the world index, you can see that the world index is kind of chopped along sideways here. And these Facebook, Amazon, Netflix, Googles, they're up, 500, 400%. Whereas really their earnings hasn't outperformed. When you actually have a look at, how much has their earnings gone up compared to all these other companies in the world? Well, it's probably been twice as good, but it doesn't deserve this, 400-500% better in terms of how much the stocks have run. Another inequality that the Fed, how can you argue that they don't cause this when they've bought $4 million worth of these Amazon bonds with this tiny, tiny coupon rate maturing in 3 years? The Fed are doing the same for Apple, just giving them a few more $1 million. Why does Amazon and Apple need $4 million? They've got $400 million. I think they've got $400 billion cash on their balance sheet. Is that correct? $1 trillion companies? I think that's about right. Some of these companies have got hundreds of billions of dollars on their balance sheet. Why on earth do they need the Fed to come along and buy some of these bonds off them? And here we are with these paychecks and these bonuses being cut from the average American. And this is why you're going to see pitchforks. If this was on the nightly news, people would already be out in the streets, but they just don't know. They don't understand how this stuff works. And the wealthy, I'm so glad there's people like Shamath that are calling out all this BS. He's saying that all these tech stocks are facing a modern day trust busting, but we need more of this. Google's search algorithm has upgraded. It's made it harder for websites to win traffic. So maybe a little company like us, if you're searching for how to buy Bitcoin, it's going to take you to a big corporate website or something else, and just everything is against you. Those YouTube ads. Now we've got Twitter that have banned crypto addresses. I'll get into that later, but I just think it's not just coincidence. There is something going on here, but I'll get into that in the crypto section. Here we can see the probability of recession when we look at the different asset classes and how they're pricing it in. So the US stock market basically saying 20% chance, whereas we have a look at the bond market. This is what I say, the smartest money. They're pricing an almost 100% chance of that recession. And we know that we're heading into recession, so why are stocks shrugging it off? High yield debt, high yield credit. Because the Fed are there, they've completely warped markets and distorted that risk. So it's no wonder that all these hedge funds can actually blame the Fed for wrecking their strategies. And this is a healthy part of the market. Shorting is healthy. It stops stocks from going parabolic. It keeps them at fair value. And all those market mechanisms have been destroyed now. Here you can see US Treasury yields at the lowest in history. I think they are going to go near zero. The worst case scenario here is if they get negative interest rates and then they get inflation. And that's when real interest rates that just blow out. And that is the Goldilocks scenario. That's when gold can go to, $2,000, $3,000, $4,000, $5,000. And I think Bitcoin runs to $100,000 if we get that scenario. So at the moment, people are still relatively happy to buy these US stocks compared to everywhere else in the world because they can get an okay dividend yield of around 2%. When you have a look at this yield compared to the 10-year bonds, 80% of these stocks have got a better yield than the US Treasury market now. So that's why we're seeing, and again, I'm hoping you're following along here and tying this all together about how the money flows around the world at the moment. This is why we're seeing overseas huge flows into stocks from all these foreign purchasers because they are getting a better yield than buying a negative yield bond in Europe. You get 10% on buying the US stock market. So all these foreigners have dropped their US debt. It's at a record low holdings, the lowest since back in the early 2000s. And they're going into those stocks, so out of bonds into stocks. Whereas if we have a look at what the US funds are doing, they're going into fixed income. So they want this high yield government bonds, but they're not really in the equities. They're starting to say, hey, these things are overvalued. We've made a lot of good money here. Let's try and get some yield somewhere. If the Fed are going to buy these junk bonds and we can get 3, 4, 5%, let's play in that playground because we know they've got our back. Now, this is the most important part of the video, tying this all together. The Fed are now openly talking about a major policy change. So remember, they've always spoken about stability, maximizing employment. Well, now they're actually talking about letting inflation run hot. And they've openly said that in a few different hints here and there. And what they're saying is actually look for a formal statement soon. They want people to think that things are going to run hot and grow. We're going to pump in so much money. So get people, wanting to spend. I think that is so dangerous. And when you have a look at the real costs of living, shadow stats, inflation, I've done these videos, the whiteboard videos for you, but this is the real cost of actual, goods and rent and healthcare. It's way closer to 8, 9, 10% or more a year. And that's why we're seeing asset prices go up that much. So when the Fed say they're going to try and run inflation hot, what does that mean for the actual real cost? Are we talking, 20%? And so when we see the M2 money supply actually growing at this record pace of, on target for 20% or more in terms of the amount of money they've created, if that goes into the real economy, this is often tightly correlated with the inflation figures. And if this does spike up and catch up to where it traditionally does, then we are talking about big rates. And that's reported inflation around 8%. That means the real inflation will be 20 or 30%. And that is really, really scary when you consider global debt's now, well, some figures are saying 300 trillion. It is absolutely going parabolic. People can't afford to pay high interest rates on their debt because of all this inflation. Look at the Federal Reserve, the Bank of Japan, in terms of the percent of the balance sheet, the size of their GDP. So that Japan now own basically more than 100%. They're buying all the government bonds, bigger than their whole economy, and then more. Then they're buying ETFs and other things. And that's when you've nationalized your whole market. What's the point of buying or holding anything? You might as well just go to socialism and hand out money to everyone because you're already just buying everything and printing that money to do so. And that's when you go into modern monetary theory. Well, should the government of Japan just scrap the Bank of Japan and just spend money on everything? Why do they need them to buy every bond that they print? So tensions are continuing to soar. This is another piece of that puzzle where who's going to get elected? Trump's no longer favorite, but we've got the tensions there with China, talking about not listing the US stocks, not allowing the Chinese stocks to list and trade in America. We've got those TikTok tensions. Then you've got Biden, who's talking about raising these taxes and the plan on how he's going to get all this money back. Now, a lot of wealthy people in the US are saying, yeah, I should be paying more tax. I'm happy to. You've got other candidates talking about this as well, but look, with all the lobbying and whatnot, is that going to get through? I really don't know. I kind of rely on my US subscribers to fill me in on that, and it's something that tends to get the emotions going as well in the comments. But this is just the absolute perfect storm for gold, silver, and crypto as well. But I kind of laugh, and one of the reasons that I always try and keep an open mind, and I've been very bullish on gold and silver for 10 years now. You guys have done well if you've been following the channel for any amount of time. This is when Grayscale, who's the largest crypto fund, they launched their drop gold campaign right down here, still in the 1200s. And since then, gold has been on a tear. We're on the same team. I just don't know why we're attacking each other. Peter Schiff attacks gold. But continuing to see central banks themselves, they're buying more and more gold. They know this is all coming, so they're saying everything's fine, and yet here they are buying gold. But look at this. This is the stat of mobile trading surges in India. So you all know about Robinhood, the the TikTok pump and dumps that we've seen recently in stocks and crypto. But now we've got this going around the world because they see these huge tech stocks. They know all the platforms. They use them on their phone. And now we've got these mobile trading apps being rolled out around the world just when everyone's printing all this money and trying to get people to spend it in the real economy. And picture this in your mind. This is my digital thick shake theory at work. No matter where they print this money, it is just going to go into the digital world. Now, we hope some of that is crypto and a newer, fairer system. But if they continue to do this, then all the money they print, no matter where you are in the world, is going to just go into the US stock market and pump the biggest bubble of all time. Indians buying Tesla and Apple stock. This is just so nuts, and it's a headache for the Indian economy. They're printing money trying to get their growth going, and it's all going into the US stock market. So I hope you understand that point. Really important. Here's a few charts I was having a play around with, and this is the amount of gold versus the M2 money supply of the US. So this is in billions of dollars. So 32,000 basically means 32 trillion total amount of money. So this is stacked, added together. So it's actually not that much of a difference between gold and the US money supply. And here we see the percentage down the bottom, and there was one time when gold was actually 115%. So there was the market cap of gold was more than the market cap of the US monetary supply. And I think when people say that, the government will never let that happen, gold to challenge the US or Bitcoin to challenge this, I think in a lot of ways we're already there, guys. We are making so much progress, and there's a lot of money that can still flow into gold. But even more so, a bigger opportunity is silver. The entire silver space is, a market cap in the tens of billions of dollars. It's like a tiny little altcoin in the crypto space when you think about it like that. And when we see the inflows of money, the ETF, the SLV ETF has had to buy 100 million ounces of silver in the past couple of weeks. This is one of the better ETFs that does have to hold a real ounce for every ounce or share that you buy. So yes, we've been very bullish on silver. This is the SLV, the product that I often talk about and that we've traded. So we've been bullish on the GDX, the mining stocks, the GDXJ. This ETF, we did that arbitrage trade when it was $13. It's fantastic to see that all the pieces of the puzzle falling together, and hopefully you guys have made money. If you do want exposure to any of those ETFs, precious metals, we've still got that $100 sign up bonus. I'll put that link down below. If you want specific stocks, our friend Marika Tusa does all his research. Again, we've got discounts for that. We've got a big discount for members as well. So if you're serious about it, I think some of those silver and gold stocks, if we get into this multi-year bull market, there's so much potential there. And he's got plenty of free research. Guys, we've got plenty of free research over on our website as well, if you don't want that premium stuff. Okay, so I'll have a quick drink and we will get into the crypto news. I just wanted to start off by saying thanks to everyone that tuned in and watched the DeFi panel that I hosted for Binance. And that was an interesting talk from a few projects that I'm sure you've all used before. And big thank you to Horby, who reached out a bit out of the blue and did a feature on myself and I guess we're turning into a bit of a crypto family. But for those of you that don't know, Louis, my son, I gave him a Bitcoin on the day he was born, and that happened to be at around $3,800. So he has outperformed my trading account, probably your trading account. He's up 150% in his first year. And I guess I just wanted to show you that there is power to just hodling. Over time, anyone that's held crypto, I think, for more than 3 years is up at least a few 100%. We're going to continue to grow and capture market share of all this fiat money that's been printed into oblivion. So, check out that article. This is all on my Twitter, on our Facebook, on our socials, guys. So make sure you're following us there as well. Now, the big news of the week was this Twitter attack. We're finding out that it might have been via Slack. Maybe an employee gave their access to these hackers. Apparently, there's a couple of 20-year-olds that they're talking to. So whether or not they're sophisticated or they're just the fall guys. But this is another, I guess, bullish thesis for all the problems we're seeing with centralized platforms. Whether it's these scam ads on YouTube, Twitter getting hacked, Facebook, people being deplatformed. There's been a big amount of people being completely erased from social media that had a message that conflict with the mainstream. Let's just put it that way. And sure enough, there's always going to be people like Justin Sun who are trying to use this as a marketing opportunity or offering $1 million to whoever can find the hackers. But I just wanted to run through a few of these headlines from this week. And my prediction about this false flag attack, or the big narrative they're going to build in the media to turn people against crypto, it is actually starting to come to fruition. It's a little bit scary. So Elon was one of the people that got hacked, but sure enough, we've got a saying in Australia, taking the piss, and it means that you're kind of just poking fun at regulators. And he tweeted about Dogecoin being inevitable and the standard, and Dogecoin pumped. And I mean, what a time to do it, kind of tongue-in-cheek. Never a dull moment in crypto, but I think that's probably where we are at the moment. There's a lot of euphoria and people wanting to jump on. And in the middle of crypto winter, I can tell you right now, a tweet was not moving an altcoin price. So it shows you that full cycle of swings and roundabouts. The Twitter hackers, again, using Bitcoin, there was that hidden message that they put in the block about using Monero and Bitcoin's trackable. But they've already been caught using, BitPay and Coinbase, so you can follow the coins. And there's a number of exchanges where they've tried to move it. I think they're trying to use some of these Bitcoin mixers as well. But we're seeing these stories about these darknet markets mixing Bitcoins at a record pace. The promoters of OneCoin found dead. USDA talking about these Chinese drug traffickers using Bitcoin to launder the funds. Bitcoin, $1 billion being laundered by exchanges unwittingly this year to date, pinning down, again, Binance and Huobi. So these are the sort of things where if we continue to see this pushed, I think that they're really going to blow this out of proportion. If you look at the real absolute numbers, this is becoming smaller and smaller, and it's far worse in the real financial system with banks. So let's not let them get away with that. Let's educate our friends and family about what's really going on. Another one here, dark web, bioweapons. You can pick this stuff and make a narrative if you really want to from anything. Privacy coins, I do not see these as good investments. I love the tech, but with all these narrative that's been created, they are going to come out of these after these privacy coins hard, and they have already made exchanges delist them. So Human Rights Foundation, they're helping protect people in their Bitcoin funds. It's so important. It is a basic human right to be able to exchange value with another person. We've got the G20 laying their groundwork for accepting digital payments. The CFTC holding these remote meetings about different digital currencies. But just, I'm whipping through these headlines, and every bank, central bank and government have now got their plan for what they want to do. So regulators cracked down on Arbor during the week about their synthetic products and selling stocks, particularly to US investors. At the same time, I think Arbor sort of shrugged it off. It was a relatively small fine, I think, in the end. They announced that they're going to be building banking solutions on Stellar. We've got Stellar joining forces with Samsung to integrate the blockchain into their wallet. So this payment space, just look at the number of companies that are breaking in here. Revolut, crypto trading app, expanding to 49 more states. So again, America have got all these regulations. They're just falling so far behind. But anyway, PayPal letter seems to confirm that, yeah, they're going to be getting into the crypto space. JP Morgan's Singapore blockchain payment network is ready for rolling out. So again, something I've been saying for years, that all these banks are going to roll out their own systems. Japanese banking giant to issue its own stable coin. Again, this is an individual bank. And then you've got the Japanese government launching their central bank digital currencies. Bank of Thailand progressing with their launch. We've got Britain's central bank contemplating digital pound. South Korea might be spending billions on blockchain development. China testing with their delivery food service now, as well as the car sharing ride. Didi, was it last week we spoke about? 140 government services are now using blockchain. So this stuff is just absolutely taking off. Hong Kong citizens are turning to stable coins because they've got to try and get money out of the country. So look, I really strongly disagree when communities like the XRPs and other systems say these coins are no good for cross-border payments, so they don't talk to each other. That's absolute nonsense. I can send people, Kane and I spoke about this in our Ethereum DeFi DEX video that we did. You can send one stable coin to someone else and swap it on a DEX, draw the liquidity. These things are all happening. Of course you can send stable coins across borders. It's already working. It's just a matter of time. So look, these predictions are nothing wild. I think we're already going to see it. And the big battle here is the crypto exchanges that are now also trying to vie to become like these neo banks. So Gemini unveiling this hardware key compatibility in a mobile app. We've got Binance launching these swipe cards, and every man and his dog has got a debit card these days. Look, one that is marketing really hard at the moment is crypto.com, and these cards that are paying out big rewards. There's a few red flags there for me, so just be cautious, guys. Nothing is free, and these platforms that are paying out 20% annually, mathematically that cannot continue. Giving these discounts on crypto, I'm just a little bit cautious of that space. So guys, please be careful. There's some free cards out there that you can get. CoinJar, we've got a free card offer for you guys there as well. So yeah, don't overpay. Don't be sucked into these things where you've got to buy heaps of tokens and lock them up just to get a bit of a discount. I honestly just don't really think that is a good model, but you guys let me know what you think down below. Okay, so Binance may be illegally operating in Malaysia. Every week it seems they're in a country they're not meant to be. Binance actually had a record amount of BNB being destroyed. So on top of this, a record $60 million burn, they also tweeted out this afternoon that they're going to be redoing Launchpad. So that's the IEO platform. And remember, that's what drove the huge run in the BNB token price. So I was a little bit lucky this afternoon when I was making this video and CZ tweeted and I was logged into FTX. So when you see something like that, jump on, market buy. I posted in the group. I know a few of you sent me a message saying you made enough to pay and buy another yearly membership. So that is awesome to hear, guys. And this is probably a good macro driver for the midterm for BNB token. Look, those Launchpad projects, I think they're going to be pump and dumps. But at the moment, as a trader, we want to look for what the narrative is that the market is liking. And I kind of disagree with it. But again, these aren't investments. These are trades. So don't be surprised to see DeFi, shilling. These things are going to be on probably Tron, probably Binance Chain. Be really picky. And obviously, I'll do my research and the team for you guys. And we'll try and find the gems for you. But there's going to be a lot of marketing, put it that way. Okay, so OKCoin have launched their own DeFi price oracle with Compounds Tech. And this has been a hotly debated topic this week. So I think this was a fake report that's been put out. Some rumors are saying that this might have even been by Nexo. That's a bit of a competitor. The company was called Zeus Capital, but there's not much about them online. And they were saying to, short link target of 7 cents, so down 99%, which is, basically rubbish. So look, the other day I did a similar tweet that I think link was too high and it had a big pullback. And again, that was a profitable trade. But, I don't mind using profits to buy a link. lower. So I just want people to understand that sometimes I have a trader hat on, sometimes I have an investor hat on. And with Link, I think that oracles and that is very, very important, but I'm still waiting to see the competitors. People are going to come for them now. We just spoke about that, OKCoin launching their own. Now we've got some others recently getting a bit of attention. A Chainlink so far in front that no one can catch them. What do you guys think? Are you taking some profits? Do you think this is going to go far higher? I think Chainlink's up to number 5 or 6 now on CoinMarketCap. So it's had a huge run. They've definitely got a Link Marine and that army, that community. So that's definitely a positive. But this is one where temperatures are flaring if you say anything negative about the project. All right, so another platform to automate yield farming for its users. More and more of these are coming along to simplify the process for you to do it all in one platform. So I'm going to do a mega tutorial on how to use basically all these platforms, because I know some of you like being shown step by step how to do it all, and you're still not familiar with how to use MetaMask, some of these other products. BitMEX also came out with a big announcement. They're changing their name to 100x Group. A lot of restructuring, allowed to do more investments in the space. I think, again, they are going to pivot to become a sort of bank because there's so much power. I think Binance are probably the most well-positioned in the world to become kind of like a crypto bank in every country on the planet. And that is really something that not many people are talking about at the moment. Shift is a decentralized version of Swift, and this is going to comply with the FAFT rules that are coming out. So a lot of people are saying that compliance and regulation, none of these cryptos will ever be able to do what these banks, projects that are working closely with banks and stable coins, regulated coins will be able to do. But we're seeing, again, platforms or even decentralized versions saying we will build a tool to make sure we're compliant. BitGo, who's a custodian, they're adding this compliance. So I don't think, again, that is an argument. And I know that people are going to absolutely hate when I say this, but that is why XRP's price is weak and continuing to be one of the worst performers. I've just gone through a list of 30 projects that are in the stablecoin space, either a government, central bank, bank themselves, payment provider, neobank, crypto bank. They're all doing these, and none of them are using XRP. There's a few that might be experimenting with it, maybe using the ledger, but I think it's clear, guys, and you've got to be honest with yourself. Is the narrative as strong when you first invested? And only you can answer that, but I see so much competition there. Okay, so Teller raises $1 million to bring credit scores to DeFi. So this is the big problem we're trying to solve about under-collateralized loans. Aave did the same last week, and they've received $3 million from Framework Ventures and Three Arrows Capital. This is now on par with Synthetics. So we've had 2 projects that have done a 80x return from when we first covered them from members. So $1,000 invested would have been $80,000. Isn't that nice? And if they keep making these partnerships and they become this, again, crypto bank where they can have a credit score and they can lend and borrow, this is a very, very hot space where funds are continuing to invest. So you think, who's buying the top? But when these sort of projects are coming in and investing, they obviously still think there's plenty of upside. This was a great report from Bankless on the quarterly earnings. They did drop a little bit for a number of DeFi projects, but again, they've grown so fast. We're waiting to see if that uptrend resumes in terms of the DeFi growth. I have posted this in the group, guys, if you want to read this report. It was only 14 pages. Absolutely fantastic from the guys over at Bankless as well. Make sure you subscribe to them. We're going to start having them on the channel soon with a bit of a regular episode. But take some profits. We continue to find these projects. Try and rotate onto the ones that haven't pumped yet. So Mainframe, I just want to mention quickly, because this is a good example of a project when I read about it and thought they've just jumped on the DeFi bandwagon. When I heard that they've pivoted to DeFi, you're going to hear that a lot in the coming weeks. And then I read more about it and I thought, they've actually been pivoting to DeFi since back in October. What's that, 8 months ago. So they haven't just jumped on in recent weeks and months when there's been a lot of hype. Now this one's still down 96%. I think it doubled or tripled this week. I did let members know about this one a few days ago, and that's, as I said, up 100% or so already. But these are the sort of ones where be critical from now on, because there is going to be a lot of these type of projects come along and try and jump in the DeFi space. mStable launched in the last 24 hours. I think this is up again 10x or 16x if you're an very early stage investor, but these stablecoin projects are just going absolutely nuts at the moment. Nexus Mutual. So this was my top pick for 2020. Everyone has realized that the DeFi space needs insurance with all these smart contract bugs and all this risk going on. And this one has absolutely pumped this week. I think it hit $32, but once again, I'm telling members to take some profits, guys. We've done so well. A number of coins up, 1,000%, 5,000%, 8,000%. Take some profits. Don't get greedy. Let's try and keep doing our research, continuing to find good projects. Okay, so last few bits of Ethereum news here. We've got Switzerland's central bank looking to tokenize more and more things on Ethereum. They're obviously pretty confident with that platform. Yield farming, expanding into the world of digital collectibles. So being able to earn some yield or borrow against your gaming assets or your assets in the real world, that's such a huge space. Blockchain gaming, it is a game changer, pardon the pun. Engine is probably a project I continue to be bullish on in that sector, but I do think gaming, and something I'll concentrate on a lot for members in the coming weeks and months, I think gaming is going to turn into a bit of a DeFi where it becomes a real narrative and trend. So fantasy soccer fans, $4 million seed funds. This is where money's starting to flow. Atari partners with Wax. Well done to those guys there, alongside William Shatner and Marvel already. We've got Ubisoft inking a deal with blockchain RPG 9 Chronicles. Ethereum fantasy soccer, I just touched on that article already. And Matic is one of these platforms that is trying to help scale in these different fields. Gaming, possibly one of those. They're the areas that do need scaling straight away. Now, Gods Unchained has solved that problem, but some of these other platforms haven't yet. So well done to Matic, 7,000 transactions per second, and that's one of about a dozen scaling projects on Ethereum at the moment. Now, the big one is the move to Ethereum 2.0. QuantStamp have done the audit and given that a green light for the Prism client. Now, I have interviewed the CEO of Prism as part of the upcoming Ethereum documentary that I will be launching soon, and that is the reason why I haven't been doing 5 videos a week these days. I've been filming a lot of content for the documentary, and the launch date is going to be announced on Monday. They've promised me that it's going to be this year. A lot of the news was saying it's not going to be till next year. 80% of ETH is already qualified to stake according to consensus. So 86 million ETH is held on non-exchange wallets. That is such good news. I think everyone is going to want that free ETH and some yield. And this is the stock to flow that I modeled. If those people are locking up their ETH, getting the yield, the inflation for ETH is going to drop and it's going to be more scarce than Bitcoin. So Ethereum stock to flow is going to be 58, which is slightly below gold, which is sitting at around, 62 there. So if the regression line holds true for Ethereum, and there's a lot of factors in play, so I'm not saying this is the only thing, but that would give ETH a market cap of $1 trillion or more on that alone. So we'll wait and see if it's going to be that big of a transition. Santiment, absolutely loving the work with those guys at the moment. They're giving us some heads up on the social media metrics and being in front of which coins are picking up steam and being spoken about. Addresses are starting to hodl. They've helped us find some of those hidden gems. And now they're starting to say that Bitcoin and ETH are about to play catch up, I think. And I completely agree. We're seeing big traditional Forex exchanges, institutional trading. Grayscale have just reweighted their large cap fund in favor of Bitcoin and Ethereum, and they've reduced XRP, Bitcoin Cash, and Litecoin holdings. So again, I'm sorry to be a broken record, but money is going to flow into these large caps, these blue chips, and that thesis has proven right. If you've constructed your portfolio like mine for the past few years, we've done well, guys. So stick with the plan. We're going to do well in a bull market. Grayscale have added another record, so $900 million this quarter. Although the last few weeks has been a little bit quiet. I'm not sure what's happening there. People being a bit bored. There's no volatility, I guess. But they're also saying it's only a matter of time until an ETF. I want that ETF to be backed by crypto. I'm not interested in a paper ETF. We want it like the gold and silver ETF we spoke about at the start, where each dollar you put in means that they buy a share of the ETF and they buy a bar of silver. So they're the sort of ones that you want to invest in. Because I had this conversation the other night, and some people can only buy an ETF. Particularly in their retirement funds, they will only buy things that are on the screen, on the platform that they've traded with for 20, 30, 40 years. I was talking to a financial advisor, and that is what he's waiting for. And once he can do that, there's a lot of people that are interested. Bitcoin's hash rate mining difficulty hits another record high. I think price follows hash rate, so that is another positive. Look, China still controls around 50% of mining, but I've spoken about this in so many episodes that this is another geopolitical battlefield. The US, their percentage is increasing. Iran, they want a piece of this. Russia is starting. So many countries around the world are going to want Bitcoin, and I think they're going to start to hoard it like they hoard gold, like the central banks. Finally, little startup Zap have raised $3 million. Well done to those guys. I just love what they're doing. So if you haven't heard of them, they are doing an app called Strike, where you can do Lightning payments both ways. So credit card to Bitcoin to Lightning, all in the one seamless experience for the customer or for the merchant. And like I said, that is both ways, which is really cool. Now, similar chart to what I showed you before in terms of the M2 money supply. This is a log chart though. So here we've got Bitcoin, $170 billion market cap, all that money out there, $18 trillion. Look, we're 1%, and we peaked out at 2% at the top of the bubble in 2017. But again, if you told someone that Bitcoin had already achieved 2% and it's currently hovering at 1% of all the money in America, in M2 money supply, they would say, what? No way. And I think we have achieved a lot. It's not, every 1% that we gain is a $10,000 move in Bitcoin's price. So even if we can just get up to, say, 5%, that is $50,000 Bitcoin. So a little goes a long, long way when any of this money starts to trickle down in here. Because as I said, this is a log scale, guys. So this is exponential growth as we capture money. And that's why I want to sort of represent this visually, because I think money is going to continue to come into those hard assets that are finite. So tying this all together, I do think that we are going to have a big expansion in Bitcoin volatility. We'll bring up the chart in just a second for you. But when we have a look at the volatility and the price compressing, I did a detailed rundown of how to play that, how to trade the volatility, the different products that are available. Because when you have a look at how tightly this is compressing on the Bitcoin chart, let's go here. Let's load. We can see that Bitcoin tends to go in these cycles, and the weekly close is tomorrow at 10 a.m. Australian time. And when we've just been getting tighter and tighter here, I think it is a given that we finally get a bit of relief. Now, when we are in these tightening patterns, that's when alts tend to move. And we've been saying to watch the Ethereum Bitcoin pair. This is, again, another trade that we had on. We got in here and we're looking for this, and it's played out nicely, and I think this can continue higher. If it does, I expect alts to continue to outperform. This level here around 26 and around 28, once we get over there, that would be a full-on alt season in my opinion. That's when we could expect Ethereum to really run, breaking this downtrend and getting up towards $300, $400 if we can get over that level. But I also wouldn't be surprised to see a Bitcoin make a little bit of a comeback. So all the attention has gone from after the halving, and I do think that there's plenty of macro narratives, the money printing, the negative interest rates, inflation, any of those things can light a powerful spark and get money to flood into Bitcoin, just like we've seen it flood into gold and go on this powerful rally. Bitcoin tends to follow gold as well. So look, that doesn't mean that everything can't go up like we've seen in traditional markets. People say that, bonds and stocks can't go up. The dollar can't go up at the same time as gold. We've basically seen everything going up lately because of how much money has been printed. And maybe we get, Binance doing IEOs, kicks off another full-on alt season. Maybe we get India and these other retail investors on their apps trading their stocks for altcoins. There's a lot of side effects of printing too much money, and that's why I'll continue to do updates for you guys every day in the group as much as I can on YouTube. Guys, please share these videos around. The YouTube algorithm has really been centering us lately, so I really appreciate it if you can share it in the groups and with your friends. Smash that like button, subscribe if you haven't already, share these around, and I'll talk to you again soon. Cheers.